All right, so we're back and diving deep into a topic that, honestly, I think can make a pretty huge difference for people when it comes to their credit score.
Yeah.
And we're going to be talking about a couple of dates on your credit card statement
Right.
that might not seem so important on the surface,
Yeah.
but when you dig into it, they can actually have a really big impact on your credit score.
Absolutely.
So, welcome to the deep dive, and I'm excited to dig into this topic with you.
Yeah, this is a fun one. This is one of those things where you can really quickly make an improvement in your credit score just with like a little bit of knowledge.
And I think a lot of people don't realize that. So
Yeah.
we're going to be focusing on two dates that are on your credit card statement, and we're going to talk about them in detail.
Okay.
And the first one is your statement closing date.
Yeah.
And this is the date that most people are not paying attention to.
Yeah.
But this is the date that the credit card company basically takes a snapshot of your account
Right.
and says, okay, this is what your balance is, and this is what we're going to report to the credit bureaus.
Exactly. And that's the crucial bit that a lot of people I don't think fully appreciate. That this is the information that gets reported to Experian, Equifax, and TransUnion.
Yeah, and those the big three credit reporting agencies.
Yep.
And so that information is used to calculate your credit score.
Exactly.
So it's really important to understand what that date is and what it means.
Yep.
And so the other date that we're going to talk about is your payment due date.
Yeah.
And this is the date that everyone is very familiar with.
Right.
Because this is the date that you have to pay your bill by
Yes.
to avoid late fees and interest charges.
Exactly. And, conventional wisdom would tell you that just make sure you pay on time and you're good.
Right.
But there's a little bit more to it than that.
Yeah. So what's interesting about these two dates is that the statement closing date is the date that's really important for your credit score.
Yeah.
And the payment due date is more important for your finances.
Mm.
Like you don't want to be paying late fees and interest charges.
Yeah.
But in terms of your credit score, it's really all about that statement closing date.
It is. And the reason for that is because the credit bureaus, they don't really care when you pay your bill.
Right.
What they care about is what your balance is at that statement closing date.
Right.
And so if you have a high balance at the statement closing date, even if you pay it off in full before the payment due date,
Yeah.
that high balance is still going to be reported to the credit bureaus, and it's still going to hurt your credit score.
And they're going to look at that and say, oh, this person is using a lot of their available credit,
Right.
which is a sign of risk for them.
Yeah, exactly. It's all about what's called your credit utilization ratio.
Right.
And that's simply the amount of credit that you're using divided by your total available credit.
Yeah. So if you have a credit card with a $1,000 limit
Okay.
and you have an $800 balance at the statement closing date,
Right.
that means you're using 80% of your available credit.
That's a high utilization rate.
And that's a high utilization rate, and that's going to hurt your credit score.
Yeah, you could see your score drop by 30 to 70 points or even more in some cases just by having a high utilization.
Yeah. And that's a really big deal because your credit score is used for so many things these days.
Absolutely.
It's used for, getting a loan,
Yeah.
getting a mortgage, getting an apartment,
Renting a car.
renting a car, getting insurance,
Yeah.
all sorts of things.
And it can even affect your job prospects in some cases.
It's amazing. Yeah. So it's really important to have a good credit score.
Absolutely.
And one of the best ways to do that is to keep your credit utilization low.
Yep. And the way to do that is to pay attention to that statement closing date.
Exactly. So let's say your statement closing date is on the 10th of the month.
Okay.
And today is the 8th of the month.
Got it.
And you have a $700 balance on your credit card.
Right.
What should you do?
Well, if you want to optimize your credit score, the smart move would be to pay down that balance as much as possible before the 10th.
Right.
Ideally, you want to get it down to below 10% of your credit limit.
So in this case, less than $100.
Exactly. So,
Yeah.
Maybe make a payment of $620 or something like that.
Right. Yeah.
And then when the credit card company takes that snapshot on the 10th,
Yeah.
they're going to see a balance of $80,
Right.
which is only 8% of your credit limit.
Which looks much better.
And that's going to look much better to the credit bureaus, and it's going to help your credit score.
Right. And so even if you're not able to pay it down to less than 10%,
Yeah.
any amount that you can pay down is going to help.
Absolutely. Any reduction in that balance is going to be beneficial.
Right. So even if you can only pay down $200,
Yep.
that's still going to help.
It's still going to make a difference.
Yeah. So the key takeaway here is to really pay attention to that statement closing date and to try to pay down your balance as much as possible before that date.
That's the golden rule.
And so most people are just focused on that payment due date
Right.
and making sure they pay on time so they don't get penalized.
Yeah.
But if you really want to take control of your credit score,
Uh-huh.
you need to be thinking about that statement closing date as well.
Absolutely. It's like you're playing a little bit of a credit game,
Right.
and understanding the rules of the game can give you a real advantage.
Exactly.
Yeah.
So to recap the statement, closing date is the date that your credit card company takes a snapshot of your account
Yeah.
and reports that information to the credit bureaus.
Yep.
The payment due date is the date that you need to pay your bill by to avoid late fees and interest charges.
Right.
But it doesn't really affect your credit score.
No.
So to improve your credit score, you need to focus on paying down your balance before the statement closing date.
Exactly.
And that's it. That's the key takeaway.
That's the secret sauce.
All right, so next week on the deep dive, we're going to be talking about how to build credit from scratch.
Oh, that's a good one.
Yeah, so if you're just starting out,
Yeah.
or if you've had some credit problems in the past
Mm-hmm.
and you're trying to rebuild your credit,
Yep.
we're going to give you some tips on how to do that.
I'm looking forward to that one.
Yeah, so make sure you tune in for that. But for now,
Yeah.
just remember that you are in control of your credit score.
You are?
Yeah, there are things that you can do to improve it.
Absolutely.
And one of the best things that you can do is to start paying attention to that statement closing date.
Couldn't agree more.
So take a look at your credit card statements.
Yep.
Figure out when your statement closing date is,
Uh-huh.
and make a plan to pay down your balance before that date.
It's a small change that can make a big difference.
It really can.
Yeah.
All right, that's it for this week's deep dive. We'll see you next time.
See you later.